Hey guys, welcome back to another video. In today's video we are going to go over how to use and how to trade with impulse entries. So make sure you watch this video from the beginning to the end and a couple times over to make sure you fully understand how to use impulse entries. But just before we start off, make sure to subscribe and smash that like button. So as you may have noticed, I haven't been doing trade of the day videos as often as I normally have, and I don't think I will be releasing any more in the future, only when I see particular events happen in the market that I think is worth sharing with you guys. This is because the videos that I'm making now, for example this video, takes a lot of time up for me to make, produce and then edit, and so what I'm going to do is I'm going to focus solely on these videos, and when I do have time I will try and add some trade of the day videos so you guys can see a recap of the trading day. So without further ado, let's get straight into the video. One very important aspect that you need to consider before you start to trade impulse entries and add that to your trading style and your trading strategy is what time does momentum enter the market for the pair you are trading. Now this is very important because impulse entries leverage the fact that volume and momentum is entering the market at a certain time or certain time period. For example, GBP JPY, we always expect a move around 8 o'clock, but we can also expect a move between 7:30 AM to 8:30 AM. This isn't always the case either, because sometimes we may get an early move around 7 o'clock, or we may even get a late move around 9 to 9:30. Now this is something you will notice day to day. So when you're trading and when you're journaling and you're sitting at the charts day to day, you will notice that, let's say on a Monday and a Tuesday we get a 7 AM move, which means for the rest of the week we have a higher chance of getting moves, volume pushes at 7 AM. That might be the same for late pushes, and that's something that happens day to day. But I've noticed from personally backtesting and journaling GBP JPY that we generally get moves between 7:30 and 8:30 AM. Otherwise, those moves outside of that time frame are fake outs, unless, for example, like I said previously, we see 2 previous days or a day previous that we had a move at 7 AM or a late move, then only then we will take trades, or I will take trades outside of that time frame, 7:30 AM to 8:30 AM. So what I'm trying to say is, for the pair that you're trading and the session that you're trading, make sure you can find out what time or what time period your pair tends to push in momentum and volume so that you can take trades in that time or that time period. The second most important thing that you need to know when taking impulse entries and adding that to your strategy is that impulse entries are extremely risky trades to take. So whereas you would normally risk 1% on a normal trade, for impulse entry trades you would look to risk a reduced amount. So whether that be 0.5% or whatever you're comfortable with, that's what I'd advise you to risk when taking impulse entries trades. This is because we are leveraging the fact that the currency pair is going to push in momentum and take a trade while the candle is still open and we are not waiting for candle closes. I've said many a time before that candle closes are a better confirmation unless we are in an impulse entry time period in which we can take impulse entry trades. Let's go over our first example then. So here we can see that price is in a range, and then at 7:30 to 8 o'clock we get this candle here that pushes up, creates a high and then closes back within a resistance. Now that we are at the 8 AM London session open, we know that we have a high probability of volume coming into the market and pushing the currency pair in either direction, but we don't know, right? So looking at how candles have closed previously, we have a bias towards the upside, right? Because price attempted to break to the upside, it didn't, and closed below. So we know that if price breaks this high here, we can take a buy entry with stops below the current candle that is open, and in hopes for price to continue to the upside, which price does. And so that will constitute as a impulse entry. Now, impulse entries are normally taken as price breaks the previous candle's high or low. So it will be high for a buy trade or low for a sell trade. So I'm going to put that onto the screen just for you to write down. Pause the screen and write that down because that's very important. So we take buy trades as price breaks the high of the previous candle, bearish or bullish, doesn't matter what the previous candle was. If the current open candle breaks the high of the previous candle, then we take a buy trade. If the current candle breaks the low of the previous candle, then we take a sell trade. So those are the rules for taking impulse entries. So here is another example of an impulse entry, but this time it's a sell trade. We come to the market and the 7:30 to 8 o'clock candle closes like this. So we have a bullish candle and we have a bearish candle like that. Now obviously we can't take a trade normally because the way price closed doesn't really give us confidence, but we know if price breaks the low of this candle, we can take a sell trade as long as we are expecting momentum to come to the market. And this candle here opens up at 8 o'clock and we can see it continues down with our stops just above this candle's high. We will be happy with that trade, and that would have been another successful trade. So again, we take a sell trade as it breaks the previous candle's low with stops above the current candle's high, and we see price continues on and we get a nice trade out of it. Impulse entry trades are trades that I recommend experienced traders that have had at least 2 years of experience trading the forex market to take, because if you haven't had that experience, then you won't really understand how candles move when they're moving live, and that won't help you when it comes to the risk management that you need to know for impulse entries, because you need to get your risk management very on point in able to effectively use impulse entries. What I'm going to say next is very important, so make sure you write it down or pause this video and I'll put it up on the screen. So when it comes to risk management for impulse entries, when price pushes in your direction, breaks the high of the candle that you got in at and continues upside for a couple pips. Now what you want to be doing here is you want to be watching price very carefully. If price comes back to your entry, you want to close 50% of your position, okay? Because then price is not pushing in momentum, because we expect price to break the high and continue going high, or break the low and continue going lower. If price is not doing that and it's dilly-dallying around, then you want to be extra cautious because price is not moving how we expect it to. And by closing 50%, you are automatically reducing your risk. So if price goes against you, you lose less, because again, it's a very risky trade setup to take, and you need to make sure your risk management and your trade management is on point, so you lose as less as you possibly can. So when taking impulse entries, it is important to note that they have a higher success rate at supports and resistances. So if you're looking to buy a resistance, so buy as price breaks a resistance, then using an impulse entry during a volume time period, it will work pretty well. And the same goes for a support. So if you're looking to sell a break of a support, then taking impulse entries around that support as price breaks that support during a time period of momentum hitting the market, then it should work very well. And you can go back in time, back test the pair that you want to trade, make sure you understand when the momentum is coming into the market, and you will see countless times within about half an hour of, for example, let's use London Open. So 8 o'clock is London Open, 8 AM. So half an hour before and half an hour afterwards, generally you will get a big push, and you can see that you could have taken advantage of impulse entries that I've gone over in this video, and you could have squeezed some pips out of the market. So if you've enjoyed this video so far, make sure to smash the like button and comment below whether you enjoyed the video and if you fully understand. If you have any questions, just ask away in the comment section below and I'll be glad to clear those up for you, as I understand that impulse entries are a bit of a tricky topic for you guys, and that it does take a bit of time to get used to the idea of impulse entries. Unfortunately, that's it for me in this video. Like this video, comment on this video, and subscribe to my YouTube channel for more videos like this, and I'll see you in the next video.